All right, listeners, buckle up, because this week we're diving into an absolute deluge of earnings reports. It's like Wall Street's decided to have a massive truth-telling session.
Yeah, and some of these companies might be regretting their honesty when the market opens tomorrow.
Well, that's what we're here for, right?
Yeah.
To try and decipher this mountain of corporate confessions and figure out what it all actually means for your portfolios.
We'll try to cut through the noise and see if these companies are actually hitting their targets or if they're just spinning yarns.
Speaking of targets, let's start with the usual suspects. The big dogs of the market, the ones that can cause an earthquake with just a whisper. Amazon, Tesla, the type.
Well, starting with Amazon, they're expected to come in at about $1.14 per share.
That sounds pretty good, right?
It is a pretty hefty jump from last year. But here's the thing.
There's always a but, isn't there?
There always is. The e-commerce game isn't what it used to be.
Yeah, people aren't panic buying novelty socks on Prime like they used to.
Exactly. So the question is, can their cloud computing division, AWS, carry that weight? Can they keep the profits rolling in?
Because let's be real, AWS needs to be a cash cow if Amazon wants to live up to those sky-high expectations.
Absolutely. And then there's the other titan, Tesla, always the wild card.
Oh, yeah. Mr. Musk and his unpredictable ways.
Last year, they were flying high with 53 cents earnings per share, but analysts are predicting a dip down to 46 cents this time around.
So is the Tesla bubble finally bursting? Are those price cuts finally catching up to them?
It's too early to say for sure, but it's definitely something to watch. Those automotive gross margins will be they'll show us if those price cuts are sustainable or if it's just a race to the bottom.
A high-stakes game of chicken with the entire auto industry watching.
You could say that.
So we've got Amazon relying on cloud computing and Tesla potentially hitting the brakes. What other sectors are we looking at this week?
Well, tech always hogs the headlines. But let's talk about industrials for a minute. They're a good barometer for the overall economy. And we've got Honeywell and Union Pacific both reporting this week.
Okay, so what are we looking for? Steel beams and train horns.
Basically, we want to see if their numbers reflect all the talk about supply chain chaos, inflation, and that big infrastructure bill.
So if the earnings are up, it's a good sign for the economy. And if not,
Let's just say you might want to stock up on canned goods.
always be prepared.
Right.
But seriously, those reports will give us some valuable insight into how these industries are navigating the current economic climate.
Absolutely.
Okay, so we've got the tech giants potentially facing some speed bumps and the industrials giving us a peek into the health of the economy. What else is on the menu for this earnings buffet?
But we can't forget about healthcare, can we? It's always a hot topic.
Because everyone's getting older and needing more medical attention.
That and the rising cost of healthcare itself. HCA Healthcare is reporting this week, and analysts are predicting their earnings per share will be a massive $4.97.
Wow, that's almost $5 a share. That's a lot of, you know what I'm saying?
It seems like they're in a good place right now, but the question is, can they maintain this momentum?
Yeah, because nobody wants to see their healthcare investments flatline.
Exactly.
All right, so we've got some potential winners, some potential losers, and a whole lot of uncertainty. It's shaping up to be another classic earnings season.
Buckle up, Buttercup. It's going to be a bumpy ride.
All right, let's dive into some specific companies that could really shake things up this week. The ones with the potential to make or break your portfolio.
The market rovers.
Exactly, the ones where you hit that refresh button on your trading app and either do a victory dance or drown your sorrows in a giant milkshake.
Well, this week, keep a close eye on Coca-Cola.
Coke, really?
Hear me out. Their earnings are expected to be pretty flat this time around, coming in at 74 cents a share.
That doesn't sound very exciting.
No, but here's the thing. Coke is everywhere. They're a global behemoth. So even a slight dip in their sales could send shockwaves through the market.
So if people aren't buying enough Coke, it's a bad sign for the global economy.
It could be a sign that consumer spending is down, which isn't great.
Time to stock up on generic cola then.
Maybe. But let's move on to another potential market mover, T-Mobile. They're expected to report a pretty healthy $2.34 earnings per share.
T-Mobile. They're on a roll, aren't they? Stealing customers left and right.
They've been very aggressive in the 5G space, but the question is, can they keep it up?
Because the competition isn't just going to roll over.
Exactly. Verizon and AT&T are going to be fighting tooth and nail to hold on to their market share.
It's a telecom battle royale out there.
And the earnings reports will tell us who's winning.
All right, so we've got the global beverage giant and the telecom upstart. Who else should be on our radar this week?
Well, let's talk about a couple of sectors that often get overlooked but are actually really important, industrials and healthcare.
Okay, industrials first. Who are we watching there?
Honeywell and Union Pacific are both reporting this week.
And what are we looking for from them?
Well, Honeywell is a big player in aerospace and building technologies, while Union Pacific is obviously a major railroad company. So their earnings will give us some insight into the manufacturing sector, supply chains, and even the impact of those big infrastructure projects everyone's been talking about.
So are we talking smooth sailing or rough seas ahead?
We'll have a better idea after we see their numbers. If their earnings are strong, it suggests the economy is still chugging along.
And if not,
Well, let's just say it might be time to invest in some comfortable walking shoes.
just in case we have to walk to work, right?
Something like that. Now onto healthcare, which, as you mentioned, is always a hot button issue.
Because everyone needs healthcare.
Exactly. And the costs just keep going up. HCA Healthcare is reporting this week, and analysts are expecting some big numbers.
Like, how big are we talking?
They're predicting earnings per share of $4.97.
Wow, that's almost a $5 increase from last year.
It's a significant jump. But the question is, can they keep it up?
Because in the healthcare industry, what goes up?
Usually keeps going up.
All right, so we've got industrials giving us a read on the economy and healthcare potentially raking in the profits. But let's circle back to those market movers for a second. You mentioned Coca-Cola and T-Mobile. What should investors be paying attention to when those reports drop?
With Coca-Cola, it's all about their global reach. We want to see how their sales are doing in emerging markets. Are people in those countries still buying Coke, or are they tightening their belts?
So if Coke's global sales are down, it could be a sign of a global economic slowdown.
Potentially. And for T-Mobile, it all comes down to subscriber growth. Can they keep stealing customers from the competition, or are they starting to plateau?
It's a subscriber showdown in the wild world of telecom.
And we'll soon see who emerges victorious.
Okay, so we've got our eyes on the global economy and the telecom battleground. But before we move on to our wildcard pick, any other companies we should be keeping tabs on?
Well, there is one company that's been flying under the radar, but could be poised for a big comeback.
All right, folks, let's do a quick recap before we send you back out into the wild world of Wall Street. What were the big takeaways from this earnings extravaganza?
We've got a real mixed bag this time around. Some companies are riding high, some are hitting some roadblocks, and some are just playing it safe.
Like Amazon, betting big on the cloud while Tesla's trying to convince everyone those price cuts were a good idea.
And then there's the industrials giving us a glimpse into the health of the overall economy.
Hopefully they're doing a little better than my fantasy football team.
Let's hope so. And of course, we can't forget about healthcare, which seems to be recession-proof.
Because nobody can put a price on good health.
Right. In theory, at least. But seriously, HCA Healthcare's earnings are looking pretty impressive.
Yeah, almost $5 a share. That's a lot of medical bills.
Let's just say they're not hurting for cash.
Yeah.
But the question is, can they keep those profits growing?
That's the billion-dollar question, isn't it?
It always is. Now, before we wrap things up, remember, our market movers, Coca-Cola and T-Mobile,
Oh yeah, those guys. One's a global icon, the other's a scrappy upstart.
and both have the potential to really shake things up in the market.
So if Coke's earnings are fizzy, it could spell trouble for the global economy. And if T-Mobile stumbles, their competitors will be ready to pounce.
It's a dog-eat-dog world out there.
Especially in the world of business. And speaking of underdogs, let's not forget about our wildcard pick this week, Nucor Corporation.
The steel giant that could.
They're hoping to ride that wave of infrastructure spending all the way to the bank.
Well, with any luck, they'll be more successful than our attempts to predict the market.
Hey, nobody's perfect. But that's why we play the game right.
That's the spirit. So until next time, keep your eyes on the prize and your hands on your wallets.
And remember, folks, past performance is no guarantee of future returns. But hey, that's what makes it exciting, right? Tune in next week for more market mayhem, only here on Talk Diggers.